Good morning, trading world. It is July 27, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. I know it's been a while, but I am still on vacation. However, even on vacation, I am still locked and loaded for Fed Day. There are some key factors that we have to take into consideration before the announcement. First, let's take a look at the VIX and the dollar. All right, this is a 20-day 1-hour chart of the VIX. And as you can notice, for quite some time, VIX has been falling. We've even had a low over the last 3 days here on the VIX. The VIX and the dollar are both surprisingly low with everything that's going on. This means either everyone is ready and news is baked into the tape already, or a bigger down move is going to catch a lot of people with their pants down. Let me see if I can get a chart of the dollar up, because the dollar is actually low itself. It's not on this one. And here we go with the dollar. And as you can see with the dollar, I can actually go out. Let's go out to 20-day 1-hour chart as well. As you can see, the peak over here was a 109, and you can see the dollar has kind of fell into a range here around the 107, 106 area, and it looks like we're still falling as well on the dollar. Now, the other thing that I want to point out are bonds. Bonds seem to be ready to take off to the moon. Let me see where bonds. Here we are with the bonds. And let's take a bigger look out on the bonds as well on the 20-day 1-hour. As you can see, we've had a really sharp move in the bonds here in the last week or so. Almost straight up, with a high coming earlier this week. So bonds seem to be ready to take off to the moon. One of the things that I mentioned a while ago is that the undoing of the market was going to be when people realize they no longer have to gamble in equities, but can get a decent return safely in bonds. When this realization happens, we're going to see the equity market fall and the dollar fall at the same time, while bonds continue to rocket to the moon. All right, now third thing to take into consideration is Google, Microsoft, and Visa all had earnings yesterday, and they were all oversold enough and had enough bad news baked in that they were able to bounce a bit after hours. We have to understand that the market is a pricing mechanism that is always ahead. Here's the chart on Google, our 10-day 30-minute chart on Google, and as you can see, where earnings hit, And it's not necessarily the earnings that I was looking for. It's really guidance that I was really looking to make an impact. One of the things to really kind of understand is that Google is in fact their majority of their income is advertising. And in this type of environment, when consumers are starting to kind of pack it up and go in, not spend as more, at some point businesses are going to realize that, and they're not going to spend as much on advertising. So the guidance is what I was looking for on Google to kind of give a hint toward that, in which they did. But like I say, they were coming into the announcement, they were so oversold. You have to understand the pricing mechanism of the market and how the market works. And understanding that if the news is expected to be bad, then pricing will reflect ahead of the public data event. Meaning, on the rumor of bad news, sell ahead of earnings, then buy the fact. On the rumor of good news, buy ahead of earnings, then sell the fact. So as you can see with Google, everybody's expecting bad news. We're all expecting to hear this lower guidance or lower expectation in the market, and everybody has been selling into that. And now that we've got the actual factual news, we've bought into the news. Or it's not necessarily buy, it's actually short covering, because we've gotten the news. So now with all that selling, the way that you close a sale is to buy. And a lot of times people don't really understand that a lot is kicked off not by actual buying pressure, but it's the covering of shorts, that those buys look in the market as people coming in buying, but it's not people coming in buying, it's people closing positions. And then you have the fear of missing outers that come in and see this activity and think that it's actually buying, and they buy on top of that, which can kick something off. But to go back to that, how the market is a pricing mechanism, you have to consider, like, even after all of this that we've sold off, and now we've gotten a news event and we've started to cover on that news event. Now, on top of all of this, we have a Fed coming, and everyone is already prepared for, let's see what the probability is right now on the Fed announcement. Everybody's already preparing for 73.9% probability of getting a 75 to 100 basis point rate hike. So long as we stay in that range, most of it is already baked in. Now, add all of this to the fact that if we continue to sell off before the announcement, we're setting up for a huge squeeze up. On the opposite side, if we come into the day with a huge brainless float up, we could go revisit lows and beyond. What am I saying? This is Fed Day. Prepare to revisit most of the entire range we covered today at least once, no matter what the overall direction is. Then we're going to break up or break down. So that's what I want us to take in consideration and be ready for on this Fed announcement day. With all of that being said, let me bring up the key levels to watch for today. All right, here we have the key levels to watch for today. On the resistance side, we have our Jack resistance at 395 to the 396 area. We have our Queen resistance 397 to the 398 area, and then King resistance 399 to the 402 area. On the support side, we have our Jack support at 394 to the 393 area, and then Queen support 392 to the 390 area, which is going to be really important today. And then our King support at 389 to the 385 area. Now, the main thesis for today is bullish, closing above the 390.89 with a projected target high of between 396 and 402. Our alternate thesis is bearish, closing below the 390.89 with a projected target low of between 390 and 385. The current major channel we're in is 379 to 397, and the next major channel up is from 397 up to 416. We have some leftover imbalances, meaning gap down on internals. So at some point this week, whether it's today or Friday or in between, I expect a rally to go address those leftover imbalances. Let's bring up the scenarios for today. All right, here we are back with our key levels of the day. Well, our scenarios of the day. And our first two scenarios are pretty much the same as far as probability. We're going to start with our trend day up, meaning we're going to open gap up away from the previous close represented by the blue line, and we're going to start the day with a fade back toward that previous close. Don't be fooled today. The gap is large enough to feel like its own downtrend day, but it is still an uptrend day so long as we don't close below this 390.89 represented by the blue line. So we're going to start off with a fade toward the previous close, and then we're going to find support on or before that previous close, then begin our uptrend for the morning. Our uptrend for the morning will find us back toward our midday chop, which is going to be our possible Queen or King resistance area. And this is an FOMC day, so I expect us to enter this humdrum somewhere around this area all the way from lunchtime till the 2 p.m. announcement. That 2 p.m. announcement, we're going to get a head fake first, which could likely be our revisit to the lows of the day down, and then up, level out, and then our actual move for the rest of the week here, which has a likely chance of being uptrend for pretty much the rest of the week. So that's what I'm looking at on our trend day up. All right, on our first scenario, the trend day up, I had to come back and make some more notes because everybody doesn't listen to the videos, and I tend to say more things in the video than I type, but I just wanted to make light of how things will play out around the announcement that 1:55 p.m. to 2 p.m. move is likely the head fake. Then I'm expecting a head fake down, and then the likely overshoot, level off, and then we're into our actual move for the remainder of the week. So I just wanted to come back and make sure I had that so that I can actually come back and get a screenshot for those that don't watch the videos. All right, to our next scenario. All right, our next scenario, which also has a 34% probability of happening today, is our expansive range day structure. We could look to set a decision area low boundary around the jack or queen support area before exploding into the lunchtime midday chop period. We find our midday chop around either the possible jack or queen resistance area and pretty much flatline from lunch until the 2 p.m. FOMC announcement. The first move at 1:55 to 2 p.m. will likely be a head fake, then overshoot, and likely settle into the trend for the remaining days of the week. So that's our expansive range day structure, and pretty much the only difference between the trend day up and the expansive range day structure today is going to be a close at some point below the previous close, and that could happen here during the morning and then possibly again after the FOMC meet. So that's what we're looking at. All right, our last and least likely scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find our midday chop around either the queen or king support area and pretty much flatline until 2 p.m. Once we get to 2 p.m., the first move at 1:55 p.m. to 2 p.m. will likely be a head fake, lower, and then a possible overshoot, and then the likely settling into the trend that we're possibly likely to continue the rest of the week. And that's pretty much it. However, on our rounded reversal day type structure, there is a likely vice versa warning, as there is always. And the vice versa is pretty much us coming up and getting a continued push up through the cash open and finding our midday chop around either the possible queen, I would say jack or queen resistance area, and then flatlining into our FOMC meet. And then here, this is where it's going to get a little confusing, because it's likely we could do our head fake up, come down, level off, and then continue down. And we find that trend to continue the rest of the week. So that's our vice versa warning for a rounded reversal of day type structure. So this is everything that I will be preparing for. I hope this helps you. And as always, this is a very, very, very volatile day. And your most important job as a trader is understanding and knowing your risk so that you can protect the capital that you already have. I stress this each day, and it is of utmost importance today, so that if you don't feel right or feel any position that you're in is worth a complete loss, you should be out of it right now. Again, I hope this helps, and as always, wishing you a positive trading day. Have a great one.